Hi, at Investor Central, I'm Sharina Hatta. Now, Axiata Group Berhad is Asia's or Malaysia's second largest mobile phone operator. They have presences in Bangladesh, in India, in Indonesia, as well as, of course, in Malaysia. And in their latest earnings, they announced that they were putting together a dividend policy that ought to put smiles on shareholders' faces. Let's see what the analysts have to say about that and what their latest earnings were like as well. Revenue for the second quarter of 2010 came in at about 3.85 billion ringgit. That's 19.9% higher than what they did in the second quarter of 2009. And the increase was due to higher revenue contribution from XL, Celcom, and Axiata Bangladesh Limited. Now, likewise, net profit also grew in tandem to about 675.5 million ringgit. And this was due to higher revenue and lower operating costs. It also generated cash flow of about 2.99 billion ringgit, higher than the previous year, in which it registered 2.06 billion ringgit. Now, here's what the analysts have to say. Maybank calls hold at 4 ringgit. Actually, it's under review right now. The results came in above their expectations, and the dividend policy of at least 30% normalized net profit payout starting from 2011, without closing the door on a 2010 dividend to be paid in 2011, they think is a very, very good policy going forward. And another factor they thought would sustain investor sentiment is the fact that Axiata clarified speculations over a joint bid for 3G license in Thailand. It said this rumor is untrue. The analyst notes that net profit doubled due to the absence of a price war in Indonesia and lower operating costs. And the strong turnaround in Indonesia, Sri Lanka, and Bangladesh were the main contributors for the impressive performance. So they're placing their call and target price under review pending an update from Axiata. But for now, they say hold with a price target of 4 ringgit. Research is bullish with a buy call at 6 ringgit 2 cents. They foresee a bright future, and they think that all of Axiata's operating companies like Celcom, XL, and Dialog continue to grow earnings, with the exception of India. And the reason it's not growing in India because it's higher marketing costs because of massive competition. They also like the dividend policy, saying it's very positive. And they like Axiata because of its exposure in high growth, under-penetrated countries. So there's further upside in earnings growth. They say buy with a fair value price target of 6 ringgit 2 cents. So the future looks good for Axiata, but should you be buying it? You would if it's a value stock. And at a price-book ratio of 4.03 times, that's kind of expensive as a value stock because you're paying 4 ringgit 3 cents for a stock that's worth 1 ringgit. We have to give it a cross for this category. For free cash flow, they generated about 4.64 billion ringgit in cash, and after reinvestments, they were left with 1.35 billion in free cash. That's positive, so we give it a tick for free cash flow. They didn't pay a dividend yield in the fiscal year 2009, so we give it a cross for dividend yield, but do keep in mind their new dividend policy that they're putting in place for 2011. And as for their outlook, they've put together quite a comprehensive key performance indicators guidance for the financial period ending 31st December 2010. Now, they've projected revenue growth of 12%, earnings before interest, tax, depreciation, and amortization, or EBITDA as we know it, to be 14.1%, and a return on invested capital to be 10.1%. Now, for a useful statement with very specific targets, we give Axiata a tick for outlook. But if we look at management, they weren't ranked in the top 100 companies, so we have to give it a cross for management according to the Corporate Governance Survey Report 2008. Analysts surveyed by Reuters have on average an outperform call on the stock with a price target of 4 ringgit 75 cents.
Sorry, that's all for the free version of this program. But you can keep watching in 2 ways. Either log on at investorcentral.org or watch on StarHub Demand TV. Press VOD on your hub station remote control, select Lifestyle, then Investor Central.